And at Street Signs, as we told you, we are in the middle of a special series on fixed income, talking about opportunities in bonds. More than one bond investor has told us that the global credit crunch has led to the opportunity of a lifetime. You've heard investors on this show say, aren't they glad they are alive right now to be playing in this market? So today we wanted to look at international debt plays. We've got Erin Steinmetz. He's with us. He's a five-star manager of the Oppenheimer International Bond Fund, along with Greg Hopper from the RDO Global High Income Fund. Now, gentlemen, it's interesting. I have both your talking points. I don't know if you do, but you do have some similarities here. Let me start with you, Greg. Brazil.
Yes. Well, Brazil has been a strong economy for quite a while. They've used the recovery that we are exiting at this point to really repair their own balance sheet. Their monetary authorities are probably an exemplar of prudence at this point, keeping policy quite tight, even in this environment. So we like Brazil, both in the governments and also in some of the corporates.
Art, interesting. I know you like Brazil also. You also mentioned Turkey as a name you like, and I know Turkey they have had some serious issues with their budgetary situation. You think they're going to get through it?
Yes, absolutely. I mean, what we're seeing here is, obviously in the context of financial crisis and a lot of deleveraging, a lot of forced selling, there's some not really good discrimination going on. Also, you have to consider that as a result, people are focusing or taking some things for granted which we don't necessarily think can be taken for granted. One of the things, for instance, has to do with oil prices. Interesting both from a Brazilian standpoint and from a Turkish standpoint. People are worried about the effect of lower commodity prices on emerging markets. And with a very broad brush, that's true enough. But Brazil is not a net oil exporter. We don't see a really big suffering in that domestic market from lower oil prices. Conversely, Turkey actually benefits quite dramatically. The thing everybody knows is that the current account is problematic in Turkey. Not so much the domestic fiscal situation, their budget, but the current account deficit. Lower oil prices make have a big boost to improving the current account situation in Turkey, and I don't think it's being adequately discussed.
Interesting. And Greg, I noticed neither one of you are going to go out and limb here on Russia. I was only sort of smiling here. Let me ask you, though, about Germany, which I believe is an area you had been focused on.
Well, Europe in general, especially in high yield, has had a very violent reaction, even more so, believe it or not, than we've seen in domestic debt markets. And we really are seeing a number of instances of very good companies being thrown out with the bathwater. Speaking of commodity prices, we see, for example, there's a company called Impress Metal, which is probably one of the oldest issuers in the high-yield market in Europe. They make tin cans. With commodity pressures off, I would argue that they may actually be in a better situation going forward, yet their bonds are being pretty freely offered, floating rate bonds that you can swap out to over 15% yields. That's just one small example, and we can see it both in the riskier end of the spectrum as well as more stable companies. So Europe is, it's a volatile market to begin with in high yield in Europe. When you get into these kind of circumstances, you have some real extremes in terms of valuation.
And Art, in your view, the bottom line, especially when it comes to emerging markets, which have been crushed so much in terms of both debt and fixed income, would you be able to, your view that really is where the biggest opportunity is right now if you've got the stomach for the risk? You
have to discriminate, clearly. There are going to be winners and losers here, and now that the immediate crisis with the banks perhaps is being addressed, we now are facing a prolonged and severe global slowdown. So you obviously have to discriminate, but at least we're going to transition into a phase where actually doing some homework and looking at fundamental value is going to help you out, and there are opportunities out there.
Art, Greg, thanks very much to both of you.
Yep.